Hi, it's Friday, July 29th, 2016. Monaco64 here, home of alternative economics and contrarian views. I'd just like to talk about the Bank of Japan. They had a policy meeting today, like the equivalent of the FOMC for the Fed. The news came out at quarter to midnight. Quarter to midnight, yeah, New York time, or quarter to 5 a.m. London time. So it actually came out yesterday in New York and today in London, but that's not the point. A lot of people, I think the majority of economists in Japan were expecting a big surprise by the Bank of Japan in terms of lowering even more their negative interest rates and increasing the size of QE. But as I read here from news headlines, Zero Hedge, for example, says Bank of Japan shocks market, shuns government pressure, leaves QE and rates unchanged, questions policy effectiveness. There's more here from investing.com. Yen jumps after BOJ easing falls short of expectation. There is a new stimulus package, though. The government has announced after the meeting. We've seen a new stimulus package by the Bank of Japan, and it includes $130 billion in fiscal measures. So it's not really free money from the central bank. It's just going to put Japan into more and more debt. In terms of the Bank of Japan, they did announce, though, that they're going to increase the amount that they buy in equity ETFs. So they're like not buying as many JGBs, but they've kept the amount the same, which is very surprising. And what's happened, we've seen a lot of volatility in the dollar versus the yen. Dollar yen right now is at 103.35. That's down 190 pips, or down 1.8%. The low in the dollar was 102.68. So it's off the lows, and the high was 105.67. So a lot of volatility in the foreign exchange. And if you remember a week or so ago, or maybe a little more, there was talk of helicopter money. Bernanke went to Tokyo, and the dollar kind of bottomed around 100, and then we rebounded back up to, I think it was, see here, yeah, it went up to like 107.50. So it went up like 7.5% just because of this expectation that the Bank of Japan was going to do a lot more, and they haven't. So I expect the yen to continue to strengthen. The other point I'd like to make is that in the end of January this year, the Bank of Japan did surprise the market. They did increase QE. They did cut to negative interest rates. And despite that, the yen continued to strengthen. So they're kind of lost the battle right now in trying to weaken their currency. And the reason I talk about that, the dollar yen, why it's so important, it's because it's used as what people in the markets call a carry trade currency, and a carry trade is a currency that is very cheap to borrow or to sell, in this case the yen, because rates are like zero or negative, and the trend has been going down in that currency. So you borrow in yen, you pay no interest, and normally the currency should be weakening so that your borrowing is worth less, which is a good thing. And then you take the proceeds in dollar, and buy, dollar assets, which helps risk trades in the world. And since the end of 2012, when the dollar was languishing around below 80 to the yen, around 78, 80. It was then that the Bank of Japan and the government announced this huge stimulus and, QE, and the yen weakened, or the dollar strengthened from, just below 80 to a recent high last year of, let's see here, 124. So a huge devaluation of the yen happened there. But since then, we've dropped, and the yen can't seem to weaken anymore. We've dropped from 124 last summer to a low of 100 just recently. And that has not helped risk assets, even though I know that the S&P and the Dow have made new highs. But if you look at Europe and the rest of the world, the stock markets are below last year's high. So I even made a video in April, and it's going to go up on the cards in this video. You can click on the eye on the top right hand side of the video, and it says strengthening yen pointing to market turmoil. And I made this video on April 7th when the dollar was dropping quite sharply against the yen. So I think it's a significant development. It looks like central banks are losing their effectiveness, and that means the markets don't buy into this point that QE and negative interest rates are actually good for things. In terms of the markets, yeah, there's been volatility in the FX, but the Dow is pretty steady. It's only down 20 points right now. Gold moved around a little bit, like between 1344 and 1328 just after the news, and right now it's 1335. I would expect gold to continue to do well, because if people are going to shun risk assets by not borrowing in yen to do carry trades, I think that should be good for gold. If you think about gold, since the since the Japanese really stepped on the pedal to devalue their currency in the end of 2012 until December last year, the yen had been quite weak, and that had kept the dollar strong and gold weak. But since December, it looks like the trend in the yen has shifted completely, and that's when gold and silver have started rebounding from December 2015. So I'd expect that to be positive for the precious metals. And yeah, it looks like the central banks are losing their effectiveness and credibility, in my opinion. What else? No, that's about it. I just wanted to let you know I've signed up to a website called patreon.com. It allows viewers to donate as little as $1 a month to my channel. If you'd like, if you think you'd like to donate and that I add value, I'm not asking for it. You don't have to. But it would help, I guess. And apart from that, if you enjoy this video, please like, share, and subscribe. And thanks for watching. I'll keep you updated. Take care.